So, should we buy or sell the robotics stock Intuitive Surgical? First off, read this disclaimer carefully. I have put this stock in the Megatrend's theme called Stationary Robots. Specifically, it's in the medical robotics subcategory. 2% from the 52-week low, minus 38% away from the highs. Here is their website, striving for advances in lung care. Robotic assisted minimally invasive biopsy with ion endoluminal systems. I don't think there's many visitors who have any idea what that means. Okay. Stapling consistency and precision. With SureForm, you can reduce uncertainty and increase stapling performance. So this is a very fancy, almost like futuristic company. So it's really cool. The issue when you are in an industry that's very high tech is that it can be difficult for Wall Street to price the company efficiently. So here is the chart, weekly data points. We do see that it's been on a huge rally since the IPO, gone from a tiny company to a much bigger one. The entire surgical industry space is very huge, so there's a lot of market share that Intuitive Surgical can grab. So yeah, a lot of growth opportunities nonetheless. The stock has fallen down to an interesting level. It's a level where we have to assume that the bulls will try something. Support back here, and also some support here from the previous highs. So this is a level where the bulls have an opportunity, but this is also a level where if the bears do break it, it's very, very ugly. You really do not want to see, especially these lows here from June of this year and June of 2020 break, because that would be really, really not good. Unless, of course, you are a bear. Looking at the daily data points, we are currently at something that could work as a double bottom. That is what the bulls want to pull off. Given that the bulls were able to stop the sell-off at that level, we have to assume that the bulls are at least trying something here. That doesn't mean they will pull it off, but they are showing some interesting behavior. At least they are protecting a key low. Looking at these other indicators, yeah, there's been quite a few times where this current level on the RSI has formed a key low. Looking at the daily data points, we do see, if we zoom in a bit here, when we go back to, back here, we had a similar RSI level. Going back here, after this sell-off, this RSI territory led to a bit of a decent rally. Let's measure. It was 11-ish%. So in my notes I write horizontal support. I do give the technicals a 5 for the bulls, but the problem with horizontal support as an interest signal is that it's very precarious. It's a huge deal. It can form very major lows, but if it were to break, the sell-off can be very substantial. So horizontal supports, especially long-term horizontal support levels, they are far more explosive than a moving average support. Let's look at the seasonality. So to the right here, we get the data over the last 5 years in green, 7 years in blue, and 10 years in red. The seasonality is a bit messy into the 14th of November, but from then we usually see some strong performance into the end of the year. To the left, over the last 5 years, you see that October and November are stronger than September, over the last 10 years. Significant increase in bullishness from September to November and over the last 20 years. So October closes higher only 53% of the time, but on average there's a 3.1 gain, and November is the second strongest month. As such, the seasonality here is interesting. We are still in September, but the coming months, they do have a bullish tendency to them. So overall, I do think that I will give this one to the bulls with a 4. Next, we will look at the fundamentals. So Sachs as a number 3 hold, D value, D growth, D momentum, industry rank bottom 39%. Yeah, so not bullish, more bearish, frankly. No yield, market cap is 68 billion US dollars. Looking at insider activity, sell, buy, sell, buy, sell. So yeah, erratic behavior from the insiders. Looking at the consensus estimates, we do see that 21 analysts are covering the stock. Average price target is 32% above us. The highest target is 71% above us, but we do have a price target that is minus 8% below us. So there was some bullish data here on the fundamentals, but also some bearish. Putting it all together, I end up with a 2 for the bulls. So let's look at relative performance. We do have 89% correlation with the S&P 500, 96% with the medical devices ETF, IHI. Then we do have 92% with the robotics ETF, and minus 46% with the dollar index. Short term, 93% with S&P 500, 97% with medical devices, 94% with the robotics ETF, and minus 84% with the dollar index. So the strongest correlation we did get is with the IHI, the iShares Medical Devices ETF. So what happens with the IHI is going to have the biggest effect on Intuitive Surgical. Going way back here to 2011, you see that the red 200-week moving average was very bullish. Here, extremely buyable, but, boom, break below, boom, break below. Notwithstanding the break, the bulls, they do have an opportunity to form a double bottom, but that is only the thing they can do now. They have lost, that key moving average. So the bulls, they have an opportunity, but they have a very, they don't have much time to take advantage of that opportunity, because the bears, they obviously do want to see that double bottom fail, because if the double bottom fails right after the bulls lose the 200-week moving average, then you quickly can see panic. On the daily data points, looking here at the wick on Friday, we went low, but then you do see here that the bulls, they formed a hammer. Yeah, so here you can see the hammer more clearly. There are definitively bulls protecting lows. That's interesting to see. So I do, there's interesting behavior from the bulls, but the bears are also making some powerful moves. So the situation here for the IHI is very messy. It's quite the battleground. Looking here at these other indicators, it's a bit noisy. The MACD on the weeklies here just sent a sell signal. Looking at the dailies, RSI is at a daily level that has formed lows here in the past. You can see here back during this sell-off, it did form a bit of a low here as well. A temporary low, a bit of a mean reversion to the upside. Here we are comparing the Intuitive Surgical stock with the medical devices ETF. In this case, we are here again, we can't escape horizontal support. The problem is that we are below the level back here, and we are also below the recent horizontal level from back here. So this is a weak horizontal support. Here is the seasonality. Um, it's very much up and down. We do see that from mid-ish November, Intuitive Surgical clearly outperforms the medical devices ETF. Overall, I give the bulls of 1 on relative performance, but yeah, not much to go on here because the bears have made a strong move. The bulls, they made the last move, but it was only a protective move. So yeah, we are at horizontal support. That is the number one entry signal and also stop loss. We have a 3.0 in favor of the bulls. So overall, this is an opportunity that they can take advantage of. But there's no doubt about it. Horizontal supports are a huge deal, and the bears are very motivated to break it. So yeah, next week will be extremely important for Intuitive Surgical. Let's look at some of the charts in the medical devices ETF. So we start with Thermo Fisher. Let's hope it comes up. Yes, it does. Uh, so we have lost, the blue 100-week moving average. Let me just draw it in. Extremely important, extremely viable in the past. Here you can see that the bulls, they have certainly made an effort to try to turn it into a support level, but the bears have also made their own moves. So it's now currently a battleground. Yeah, this is very messy. You do have horizontal support on the dailies. On the weeklies, an interesting RSI level in play that has formed some temporary lows, but overall, this is messy. Next, we have Abbott Laboratories. On the topic of very important moving averages, look how extremely viable the red 200-week moving average was here. Beautiful entry level major win, and now we do see that the bulls, they really tried to make it function as a support level, but boom, the bears close us below it. Yes, the bears have made a strong move. They have sent a signal. This is very demoralizing to the bulls. Yeah, this is just not a good situation. It's not panic yet, though. That's the thing. But no doubt about it, this is a big win for the bears. Next on the list is Medtronic. We have fallen down to a horizontal-ish level. Let me just draw that in. So there is some support back here, a bit of a volume shelf. The problem is that we have lost also various horizontal support levels. Yeah, looking at RSI and the PPOs. Yeah, it's messy. As a Medtronic is just sending a lot of noisy signals. So let's go to Stryker Corporation. Yeah, so it's actually been dabbling below. So you can see that the 200-week worked magnificently back here in 2012. Lost it here, but reclaimed it, and now it's just a major battleground. And I'm not a huge fan of trading stocks that are in a very noisy territory, because then, your bearish trades could get stopped out and your bullish trades, it's just a mess. I prefer clean trades. Finally, we have Boston Scientific Corporation. Yeah, we have seen a battle around the 200-week moving average ever since 2020. We lost it. You see here that the bulls, they managed to test it here, late August, but now they lost it. So the thing is that we have looked at Intuitive Surgical and also some stocks in the medical devices ETF. There were some interesting opportunities, but No doubt about it, we are currently in a very noisy and very intense, market setup. So I do think that there's a risk of choppy behavior. There just is. So if there ever was a time to have a long short portfolio, market neutral portfolio, it is definitively now.